In this presentation, we will take a look at the concept of filing status as it relates to federal income tax returns. When considering the Form 1040, the designation of the filing status will be up top, where we have the filing status of single, married filing jointly, married filing separate, head of household, and qualified widow, widower. You'll often see some abbreviations such as the MFS for married filing separate, HOH for the head of household. You might find one or see as well the MFJ for married filing joint. Typically, these will be fairly straightforward. However, there are some complications that you want to be aware of as you go through the tax preparation. This is where that information will be indicated. What will our strategy be as we think about these items? We want to first know the general rules. The general rules for filing status will generally be fairly straightforward. When we have those types of areas that are more complex, then we want to research those more complex situations. So we have an idea in our mind, the general rules. Then when we hit a complex situation, we think, oh, that's okay. We're just going to go to the research for that particular situation. Where can we go? One good place to start always is the IRS website at irs.gov. We can look at the instructions which can be found on the IRS website for Form 1040 instructions. That's a good place to start. When we think about our equation in terms of our income statement, our tax equation, we're looking at the line items for the standard deduction and the tax rates. These are the things that are going to be primarily affected when we change things like the filing status. In other words, what's going to happen when we change the filing status? Well, typically, if you jump back to the forms, then you're going to be looking at that standard deduction line, and you would expect that to change if you were to change the filing status as well as the tax rates. If we look at those lines on the 1040, then, when you change the filing status, you'd go down here and you can take a look at the standard deduction. This is on page 1 of the 1040, line 9, and you have a little box to the left which actually tells you the filing status and the related standard deductions for it. Then you can go to page 2 of the 1040 and you would expect the actual tax calculation to change because the rates would generally change. This is something that the tax software will typically calculate for you. So when you change the filing status, then you would go back to the return and check these line items at a minimum. Those are going to be the main line items to check. Then the standard deductions, if we were to consider what the standard deductions would be for single, married filing joint, married filing separate, head of household, qualified widow, widower. This is the general rule for the standard deductions, which is dependent on the filing status. And here we have the different tax rates. It is a progressive system, as we recall. We have the single, married filing joint, married filing separate, head of household. As we can see, there's going to be a hierarchy here in terms of what we would prefer with regards to the rates. So the single rate is typically going to be the worst filing status because we'll typically end up in higher tax brackets with the single. Married filing joint, you'll typically have better tax brackets. Of course, that would make sense because now you have two people that are filing the same return. And the idea being that if you're talking about a household that has two people working or one person supporting two people, then it would make sense that you would have to adjust the tax code for that relationship. And one way to do that is with the standard deduction, and the other is with the tax rates. And then we have the married filing joint or married filing separately. We'll talk more about that later. That's more of a kind of an unusual type of filing status. The main ones would be single, married filing joint, and then the head of household, which is kind of comparable to single. Oftentimes the question would be, would you file as single or head of household? Of those two, you would prefer from a tax standpoint to be filing at the head of household standpoint. The IRS also has a nice resource page that you can visit here. If you have questions about the filing status, you can go to this URL, what is my filing status? The filing statuses will be, as we've seen, either single, married filing joint, MFJ, married filing separate, MFS, head of household, HOH, qualified widow or widower. There is going to be a hierarchy of the filing statuses. The single's the default. That's kind of the worst one to have for the filing for tax purposes. Married filing joint would typically be better, although, as we've said, it's going to be two people on the same return, and so you have to take that into consideration when you're comparing single versus the married filing joint. We have the married filing separate. This is typically something in most cases, if you were thinking about the taxes overall, then, and you had a choice between married filing joint and married filing separate, usually married filing joint will be better off than married filing separate. And oftentimes the IRS will take away some of the type of benefits you might have when filing married filing joint when you think about married filing separate, because they're going to be concerned about people filing married filing separate simply to take advantage of some type of tax benefits such as credits and deductions. Therefore, between these two, usually beneficial to go with the married filing joint. And that's usually the standard that you would have if someone is indeed married. And then we have the head of household. Head of household will typically be compared to the single status. If you can qualify for head of household, it would be better for filing statuses. So if someone is not married, the question will typically be, can they qualify for head of household? If they can, we would like to, because it would be better for taxes. If they cannot, then they'll be the default as single. And then under the situation where we have the widow, qualified widow, or widower, if there's a death in that situation, we would research whether or not their qualification would be there for the qualified widow and widower. So the main ones that we're thinking about here will be the single, married filing joint, head of household. That's the ones that you're going to be thinking about or working with most often. More unusual cases would happen if someone wants to file married filing separate for some kind of reason, or if there's some situation with the taxes would actually be beneficial to do that, which is rare, or in the case of a death and you have the qualified widow or widower. So let's go through this in more detail. We have the single filing status. If any of the following was true for December 31st, you were never married, you were legally separated according to your state law under the decree of divorce or separate maintenance. So the situation of a divorce or a separation where possibly there wasn't a formal divorce are the areas where the single status can be confusing. In the case where someone was never married, well, that's pretty straightforward unless there's some kind of situation where they would qualify for a head of household status. But in the case of a divorce or a separation, that's usually where you have the question. But if at year end your divorce wasn't final and interlocutory decree, you are considered married. You were widowed before January 1st of the tax year and you didn't remarry before the end of the tax year, but if you have a child, you may be able to use the qualified widower filing status. So in the case of a death, then there'd be a question as to whether it be qualified widow or widower, and if there's a child involved, that's typically one of the situations where you might be able to qualify for a head of household as opposed to the single status. Then we have the married filing joint. If any of the following apply, you were married at the end of the year even if you didn't live with your spouse at end of year. Your spouse died in the tax year and you didn't remarry in the tax year. So again, obviously in a normal situation of a married couple, you're saying if they're married, they typically live together, that's fairly straightforward. What if they don't live together? Then the question is are they separated? Is there some type of legality that there's a legal divorce in some type of way? What if there's a death that happened in the year? Well, if there's a death that happened in that tax year and there was no remarrying within that tax year, obviously if they remarried right after the death, then that would be something different. But if not, then your spouse died in the tax year and you didn't remarry, then we got the married filing joint status, which would be beneficial, better than single status for tax purposes. You were married at the end of the year and your spouse died in the following year before filing taxes. So again, what if the spouse died in the following year? Well, you were married during that year, so then you would have married filing joint. A married couple filing jointly report their combined income and deduct their combined allowable expenses on one return. They can file a joint return even if only one had income or if they didn't live together at all. However, both persons must sign the return. Once you file a return, you can't choose to file a separate return for that year after the due date of the return. So both people have to sign it. Obviously, when you're talking about a married return as opposed to two individual returns, you're combining that income together. You're thinking about these two individuals as one with regards to the taxes. And that's why when you think about the tax code, they're going to accommodate for a married couple, basically trying to make, you would think, in theory, that a married couple would come out the same as two individuals in a similar situation. So and how are they going to do that? They're going to adjust the standard deduction, and they're going to adjust the tax rates. And so that's going to be typically the idea of what you would kind of consider to be happening on a married return and a single return. So you would expect the tax rates to adjust for the two incomes to be involved, and you would expect that the standard deduction would be about twice what the single deduction would be. So that's just general idea what you would kind of think. Joint and several tax liability. If you file a joint return, both you and your spouse are generally responsible for the tax and interest or penalty due on the return. This means that if one spouse doesn't pay the tax due, the other may have to. Or if one spouse doesn't report the correct tax, both spouses may be responsible for any additional taxes assessed by the IRS. So note, like a partnership, you have the two individuals on one return. If there's basically a problem with the return, or if there's something that wasn't reported correctly, or the tax responsibilities of one spouse are going to be the responsibility of the other spouse in essence as well. That means that if one spouse doesn't believe that the other spouse is reporting correctly or something like that, that might be one situation where you'd want to say, well, maybe we should have a separate return in some cases and do more research into like an innocent spouse type of situation. In other words, you may want to file a separate return if you don't want to be responsible for any tax due if your spouse doesn't have enough tax withheld or doesn't pay enough estimated tax. Generally, a married couple can't file a joint return if their spouse is a non-resident alien at any time during the year. However, if you were a non-resident alien or a dual status alien and were married to a U.S. citizen or resident alien at the end of the year, you can elect to be treated as a resident alien and file a joint return. You can go to publication 519 on the IRS website at irs.gov for more detail there. Married filing separately, MFS. This is kind of more unusual case. Most of the time, if you have a married couple, it's usually beneficial to go married filing joint, but in some special situations, you might have the married filing separate, the more unusual case. If you are a married filing separate return, enter your spouse's name in the entry space at the far right of the filing status checkbox next to qualified widower. So we're still going to have the information related to the spouse for a married filing separate return. Enter your spouse's SSN, Social Security number, or ITIN in the space for the spouse's Social Security number on Form 1040. If your spouse doesn't have and isn't required to have a Social Security number or ITIN, enter the NRA. If you are married and file a separate return, you generally report only your own income. So it's going to be similar to a single return, but remember, there's kind of some restrictions to it when you have married filing separate, such as things such as deductions and credits may be limited. That's why it's often better to file married filing joint if you have the opportunity. So we have, if you are married and filing separate return, generally report only your own income, deductions, and credits. Generally, you are responsible only for the tax on your own income. That would be one of the main reasons you might want to file married filing separate, to be responsible only for the tax on your own return. Different rules apply to people in community property states. So you want to note what state you are in. Look at the rules related to whether or not you are a community property state or not. If you're considering married filing separate, that's important. To do that, go to publication 555 on the IRS website. That's at irs.gov. However, you usually will pay more tax than if you use another filing status for which you qualify. Also, if you file a separate return, you can't take the student loan interest deduction, the education credits, or the earned income credit. You also can't take the standard deduction if your spouse itemizes deductions. Next, we have the head of household, HOH. Now, this would be compared to a single status typically. So if someone is unmarried, the question usually will be, are they single? Or if they can be, we would like them to be head of household because that would be beneficial. If you are unmarried and provide a home for certain other persons, so that's going to be the key. You provide a home for certain other persons. So if you're talking about someone who is providing a home for somebody else, that's typically what's going to trigger in your mind and say, oh, that might be qualified instead of single, a head of household status. You are considered unmarried for this purpose if any of the following applies. You were legally separated according to your state law under a decree of divorce or separate maintenance at the end of the tax year. So usually it's pretty straightforward. They're unmarried, they're divorced. However, what if they're separated and the question is, are they actually separated or not? That's when you might have to get into the detail as to whether they are actually married or separated legally, divorced, so that they can then qualify either for the single status or head of household. But if at the end of the tax year divorce wasn't final and interlocutory decree, you are considered married. You were married but lived apart from your spouse for the last 6 months of the tax year, and you meet the other rules under the married persons who live apart. You are married to a non-resident alien at any time during the year, and you don't choose to treat him or her as a resident alien. Check the head of household box only if you are unmarried or considered unmarried, and either test 1 or test 2 applies. Test 1. You paid over half the cost of keeping up a home that was the main home for all of the tax year of your parent, whom you can claim as a dependent except under a multiple support agreement. See who qualifies as your dependent later. Your parent didn't have to live with you. Test 2. You paid over half the cost of keeping up a home in which you lived and in which one of the following also lived for more than half of the year. If half or less, see exception to time lived with you. So in other words, test 1, we're talking specifically about a parent. So note, if we're talking about head of household, we consider that basically we have someone generally living with us, generally going to be a dependent. Now, oftentimes we're talking about a parent there. So if we have a parent, then it's possible that there's going to be kind of an exception to the living with the taxpayer rule, partly because, I would assume, partly because there might be special care that would be needed for a parent as they grow older, as they get elderly. So it might be the case that they have some other living standards, even though the cost would be assumed by the taxpayer possibly. And so in a parent's case, you want to consider that test in test 1, consider that situation, and then someone else living with the individual, that's generally when you would go to test 2. Continuing on with test 2 to see who would qualify, the general rule is any person whom you claim as a dependent. So usually you would say, well, they claimed us as a dependent, therefore that's good. However, there's exceptions to that rule. But don't include, so anybody that's a dependent except. Then we have your child whom you claim as your dependent because of the rule for children of divorced or separate parents under who qualifies as your dependent later. Any person who is your dependent only because he or she lived with you for all tax year, or any person who claimed as a dependent under a multiple support agreement, see who qualifies as your dependent later. So number 1, general rule, anybody who is a dependent except for the exceptions here, and then people who are not a dependent may still qualify. So your unmarried qualifying child who isn't your dependent. Your married qualifying child who isn't your dependent only because you can be claimed as a dependent on someone else's tax return. So they would be your dependent, except you can be claimed as a dependent somewhere else, therefore they're not. For your qualifying child who, even though you are the custodial parent, isn't your dependent because of the rule for child of divorced or separated parents under who qualifies as your dependent later. So if the child isn't claimed as your dependent, enter the child's name in the entry space at the far right of the filing status checkbox next to qualified widow, widower. If you don't enter the name, it will take a longer to process your return. Qualifying child, to find out if someone is your qualifying child, see step 1 under who qualifies as your dependent later. These are on the instructions for the 1040. dependent to find out if someone is your dependent. See who qualifies as your dependent later. So we can go and take a look at that and do more research if those are in questions. And the first place to go would be to the instructions for the Form 1040. Exceptions to the time lived with you. Temporary absences by you or the other person for special circumstances such as schools, vacation, business, medical care, military service, or detention in a juvenile facility count as time lived at home. So if you're thinking about what about that rule related to time lived at home, what about this situation, that situation, exceptions for them, here are the exceptions there. Also, see kidnapped child later under who qualifies as your dependent, if applicable. If the person for whom you kept up a home was born or died in the tax year, you still may be able to file a head of household status. If the person is your qualifying child, the child must have lived with you for more than half the part of the year he or she was alive. So what would be the situation if someone died in the year? Well, we have this time restriction more than half the year, but the child died in the year. So now we're talking about more than half the time of the part of the year that the child would be alive. If the person is anyone else, you could see publication 501 if you have that type of situation. Keeping up a home, to find out what is included in the cost of keeping up a home, you can see publication 501. So the question is, well, what is exactly keeping up the home, and how do I know if I have qualified for that? For more detail there, you can go to section 501. Married persons who live apart. Even if you weren't divorced or legally separated at the end of the year, you are considered unmarried if all of the following apply. So the question here, what if they're not legally married, but they're basically living apart? Can they qualify basically as unmarried? If all of the following apply, you lived apart from your spouse for the last 6 months of tax year. Temporary absences for special circumstances such as for business, medical care, school, military service count as time lived in the home. You file a separate return from your spouse. You paid over half the cost of keeping up your home for tax year. Your home was the main home for your child, stepchild, foster child for more than half of the tax year. If half or less, see exception to time lived with you earlier. You can claim this child as your dependent, or could claim the child except that the child's other parent can claim him or her under the rule for the children of divorced or separated parents under who qualifies as your dependent later. Adopted child. An adopted child is always treated as your own child. So whenever you have the adopted child, you basically have the same rules as if your own child. An adopted child includes a child lawfully placed with you for legal adoption. Foster child. A foster child is any child placed with you by an authorized placement agency or by judgment, decree, or other order of any court of competent jurisdiction. Next, we have the qualified widow, widower. Again, a circumstance that hopefully doesn't happen. You don't run across it all that often. But obviously, if there's a divorce, if there's a death of a spouse, that's when you want to say, okay, we would rather be qualified as a qualified widow or widower as opposed to filing single. It would typically be a better status for us. So what would be the qualifications? If all of the following apply: your spouse died in 2017 or 2018, and you didn't remarry before the end of 2019. So typically 2 years died in the prior 2 years, and you didn't remarry in the current tax year that you're filing for. You have a child or stepchild, not a foster child, whom you can claim as a dependent or could claim as a dependent, except that for tax year, the child had gross income of $4,150 or more. So typically you're thinking two conditions, right? There was a death of the spouse, and then you have some kind of dependent, typically a qualifying child. Back to the text. The child filed a joint return, or you could be claimed as a dependent on someone else's returns. If the child isn't claimed on as your dependent, enter the child's name in the entry space at the far right of the filing status checkbox next to qualifying widow, widower. If you don't enter the name, it will take longer to process your return. This child lived in your home for all the tax year. If the child didn't live with you for the required time, see exceptions to time lived with you later. You paid over half the cost of keeping up your home. You could have filed a joint return with your spouse the year he or she died, even if you didn't actually do so. So typically, if someone died, if there was a death of the spouse, at the time of death, that year that they died in, usually you would file the married return, married filing joint, because that would typically be the general rule. And then after that point in time is when you would think there would be a qualification possibly for the qualified widow or widower status. If your spouse died in tax year, you can't file as qualifying widower, because typically if they died in that tax year, you would typically file as married filing joint still, and then possibly afterward. Instead, see the instructions for married filing jointly earlier. Adopted child. An adopted child is always treated as your own child. So once again, in the case of an adoption, typically it'll be the same as your own child in all cases. An adopted child includes a child lawfully placed with you for legal adoption. Dependent. To find out if someone is your dependent, see who qualifies as your dependent later. Best place to go to get more research on that is the IRS website. The instructions for the 1040 is a good place to start. Exceptions to time lived with you. Temporary absences by you or the child for special circumstances such as school, vacation, business, medical care, military service, or detention in a juvenile facility count as time lived in home. Also see kidnapped child later. A child is considered to have lived with you for all of tax year if the child was born or died in the tax year and your home was the child's home for the entire time he or she was alive. So what about the case, we're talking about half a year. What about that case where someone died in the year? Well, then we're talking about the time that they were there within that time period. Half of that time period would be the general rule. Keeping up a home. To find out what is included in the cost of keeping up a home, you could see publication 501.